Welcome everyone, Simon here from the Whales of Wall Street. We have a quick fire video here around Bitcoin and particularly the Bitcoin halving and a bit more detail around that as we come into the very interesting few months leading up to this extraordinary event. And we'll do a bit of analysis on previous halving momentum and my thoughts and feelings around the next few months leading up to this area and beyond that as well. Guys, I don't personally hold Bitcoin. It sounds a bit mental, right? I haven't held Bitcoin. I think I held some way back in 2020 and I sold some off in the uprise. And I'm all about gains and percentage gains, right? I find the valuation of Bitcoin absolutely fascinating, like many of the other people out there do, of course. But for me, it's all about the gains or the return on investment potential for any of the investments or money that I put in as capital to my portfolios. So I want to make it clear, like I don't have a biased opinion as such or anything like that around Bitcoin or when it comes to talking about Bitcoin. I do, however, have an extreme understanding of the technology of Bitcoin as a blockchain itself. In fact, arguably the most secure blockchain technology out there. I've worked with companies that use Bitcoin cryptography elements within their technology and their solutions as well. And of course, I understand the full magnitude of the value proposition here. That's not to say that I won't re-enter Bitcoin when I see some interesting price points, which we'll talk about in a second as well, as we kind of conclude this overall topic. Now, for the actual aspect of this in regards to the Bitcoin halving, if you don't know what this is, I won't go into giant detail, but a very fundamental overlay of this is that actually within the algorithm, the mining algorithm of Bitcoin, so the way that Bitcoin is essentially obtained through the mining procedures, hence why you've probably seen loads of news articles over the many years of countries, not just people, but now countries having their own factories and things, mining Bitcoin. It's taking up a lot, potentially a lot of energy, albeit that I did actually do an interesting video probably about 2 years ago where it's comparing the existing banking models worldwide versus even Bitcoin itself, and actually how Bitcoin is way more advanced than the energy consumption of existing banking systems. It's quite interesting. So I'll try and find that and I'll leave it either as a clip onto this video, which might pop up on the screen as you're watching now, or at least at the end of this one as well. It's very interesting. But regardless to that, the halving policy, was very much written into the algorithm of this, and it was essentially to counteract inflation and maintain that scarcity aspect of it as well. So that's why you see the maximum supply. There was some crazy statistic out more in recent times that actually by the year 2100 or 2100 would be the ultimate end game of Bitcoin. There would be no more produced or mined. So yeah, obviously maybe I won't live that long, but you've got at least 80 odd years before those kind of time frames come into existence. Could you imagine the next 100 years of finance being very interesting from the decentralization aspect, and particularly from Bitcoin's aspect of it as well? Who's behind Bitcoin? Still, there is no 100% definitive answer. They talk about Satoshi, but who knows? And some people even believe that it's employed by the government as a testing trial system to see how it would react and what we would do with it, or just somewhere to hide a load of money. And we know many governments around the world hold a lot of Bitcoin, but these are all topics for another day for sure. But my point in question around today's topic is that halving procedure. And I've seen an article come out from the Financial Times and a few other media outlets over the last 48 hours, particularly coming around this fact that they believe, and essentially this coincides with the kind of 4-year rough cycle of the Bitcoin halving system anyway. They believe, and particularly Morgan Stanley, suggests that this halving next April will be the big kickoff of the next bull run. And that is for sure definitely in play. I think it's very important to understand that doesn't mean that April on the dot we start seeing a significant uprise of the Bitcoin price and ultimately the rest of the markets. It tends to have a good 4 to 6 month aspect of time after that period before you start seeing the acceleration. And I've just notified a few areas here. Unfortunately, the chart on TradingView only goes back to 2018, but I can flip to the coin market chart just to give you an uprise. But in general, it's kind of been the last 5, 6 or so years where we can see real defined data on this if we look and zoom into this. So actually the last halving area back here in May 2020 was just after the big drop that we saw back in March 2020, when of course the pandemic was announced in terms of lockdowns and things. That May transition came in, and as you can see, actually there was a bit of a stint upwards in August, but then a bit of a drop down. The actual bull run, in my opinion, didn't really start until around that October, November time in 2020. And lo and behold, that took around a year to accelerate itself to the all-time high. And what's interesting statistically, especially far from the last two halving cycles, July the 9th, 2016 was the last one, okay? And the Bitcoin price at that moment was around $640. And the highest price reached around December 2019, which was just unfortunately before this chart begins on the screen here. But that rose up to $19,650. Okay, so the lowest point being around March 2020, where it hit around roughly $3,000. Okay, and also around December 2018, in that period of time, it reached that kind of number too. So there's almost like two waves. So there's one where we saw that beginning in 2016, 2018, saw a drop down of a retest of that area, and then we had the all-time high hitting back round towards that 2017 mark and then into 2018. So the reason I'm pinpointing those in particular is because we have seen those reduction points before of around 84%. Okay, so the last halving event, as we said, May the 11th, I believe it was, 2020, the all-time price at that moment, that exact moment, was $8,600. So we've gone from 2016 at $640, a all-time high at that moment of $19,650 in 2017, and then low points in 2018 and 2020 respectively, which ultimately then led from that halving event in May, and as we just mentioned on that chart here, we didn't see the upward rise until around August time. So you could argue that around about, I'd say, August, potentially September time, 2024 is the potential opportunity for the bull run to begin. It might happen earlier. It might happen quicker than we anticipate. It might happen way before that. It might even wipe the slate with these thoughts and theories. We're just going back on historic data here. But again, the point being here, is that highest point in November 2021 was around 67,500. So taking it from the 8,600 to 67,500. That at the moment, from that reduction point, from that high point to where we saw more recently, which I think was around the 15th of November, again, another year to complete that, was around a 77% reduction. So that's from this point up here all the way down to these lower trigger points here. 9th of November was the lowest point, as I mentioned, is roughly around 15 to 15,500. So taking it to around about 77% reduction. So it's not quite as high a reduction as the previous halving cycle, but we still arguably haven't completed this cycle. In fact, in history as well, we see these upward movements and sideways movements many a time in the cycles. And I've always sat there and thought, I'm waiting personally, and this might sound absolutely ludicrous, because I do think there was an opportunity for sure at this 15,000 odd mark that we would try and hit between 10 and 12,000 again. It might sound like an absolute dream away now because we have hit that $30,000 mark once again for about the second or third time in the last few months. Am I going crazy? Am I talking out of my rear end? Who knows? But the point I made in a previous Bitcoin video was that actually when we look at this scaling perspective here of some of the lower points and the more recent low points, this is an area of interest because we have a real lack of data in this big rectangular area, which has taken us from that 15,500 mark to around about 4,000 mark to suggest that we've got definitive support lines, which is why I was always cautious and considering that there could be a potential 12,000 and a 10,000 mark if we were to retest these areas. But of course, so much has happened since then. You know, fundamentally, things like institutional level investment has come in, a lot of holders in there, a lot of governmental holding of Bitcoin as well. The list goes on. So it could be that actually that is completely out of the question, and arguably why on earth would these institutions and things want it to come down, and they'll just keep buying it up as selling occurs to try and keep it afloat. But we know how markets can also be dictated. Any form of negative news could come out at any moment in time, and you could see significant drops as much as you could see significant rises, as we saw last week when that crazy announcement came out about Cointelegraph suggesting that the ETF was coming out from BlackRock, and obviously that was false information, very poor timing, but we saw a huge market reaction and an uptake of that. And ultimately, not a giant reduction just yet, but still playing that game. There's still a market game occurring. So there's loads of pinpoints to happen between right now in October as of recording and April next year, and those months to follow after that as well. And I think it's a really interesting time. The other things that I wanted to consider here when we're looking at the world's events, when we have residual liquidity available and capital available, whether it's institutional level or retail level, I still think a lot of people right now are still subdued. They're probably still doing some bits and pieces of accumulation here and there, not just in Bitcoin, but other assets, but they're not going full gung-ho like we saw in the previous bull cycle markets, where a lot of people weren't really assessing risk. They were just dealing with the hype of everything, right? Whether that be influencer-led or the fact that there was so many amazing narratives back in 2020. If you remember the NFT spike in particular, and of course there was a bit of an uprun earlier this year around the AI infrastructures as well. So anything can happen, both in a positive and a negative remit. So it's going to be really interesting to see how we progress those kind of narratives, and also the macro events around the world also. We think about all the things that are going crazy with the battles going on worldwide, unfortunately, of course. And we've also got things like commodity battles going on as well, the cost of things. We've got our own bills going up higher. Of course, we've got the winter coming again. The energy markets are still playing with us as consumers, as we're paying through the nose for nonsense that doesn't really make any sense anymore. We've got inflation, interest rates. So when we get to April 2024, we've got a halving event, which I think would be very interesting to see how that occurs over the months leading beyond that. And I think if we look at the patterns, as we see that kind of 12-month-ish cycle, not just in a reduction format, but tend to see a 12-month cycle in that upward trend as well, that takes us nicely to around about June 2025, roughly. And what happens around this time is the RTGS switch on of pretty much all the CBDCs around the world, potentially, but the RTGS system in general, of replacing the existing system that's been operating for decades, if not a century, of financial infrastructure. We're talking about the messaging system, the ISO 20022 compliance and standardization of messaging in finance coming fully live, integrated worldwide in the banking formats. Next year, around April, June time, is also the RTGS engine being switched on. This is where they turn it on, they test it, etc., to that point of November 2025, leading up to that point. Supposedly, which is what we've seen from all the documentation and webinars from all the banks around the world, that, and through the BIS, of course, through their protocol systems of information, November 2025 was that critical date. So we're leading up to a very interesting point in time where, okay, that bull cycle could then not necessarily filter off. It might not do that, but certainly it's a pinnacle point. It's a pinnacle point in the history of finance, and it's a pinnacle point in the whole entire cycle of crypto. So you get all these exciting things. The RTGS system gets switched on, and then you've almost got that whole entire year and a half of buy the rumor, sell the news, as they say. The rumor, or in this instance, the programmability of everything going forwards and developing and being integrated, and the utility of everything coming into fruition. And then it kind of not necessarily collapses, but it reduces significantly of interest because all the work has been done. All the money has been made until the next bull cycle that could potentially come towards that 2030 mark. And then by then, you got huge conversations around the UN development and the targets, Agenda 30, etc. And Lord knows what else they're going to throw at us. So it's a really interesting and exciting time. And I've said this in multitude of groups that I'm involved in, and including my own WhatsApp ones that I have a lot of people in, have been with me for many years, friends, colleagues, and people that are just generally interested in the space, where I've said, I truly believed, and this was probably a couple months ago now, I said that we'd have around about 6 to 9 months left of these lower price points. And yes, as I said, for me, Bitcoin, that fluctuation up to 30,000 as a value looks fantastic. From a gains perspective, I'm still waiting for those lower points because I want to be gaining in Bitcoin. And some people talk about the price predictions of us flying way past that $100,000 mark in the next bull run for Bitcoin. Who knows, we might even see the acceleration to the next huge long-term target of 179,000. Maybe beyond that, who knows. With the ETFs, of course, this could swing things significantly at any time. These announcements could come out in the next month, the next few weeks. They could come out nearer April. And it'd be very interesting because here in the UK, we have the end of financial years. We know that in America, theirs, I believe, ends in October, and they have until next September to kind of reconcile that. Again, these pinpoints of dates are very interesting. And the timing of it, in my opinion, is not coincidental at all. It's just very convenient, for another word. So lots to be thinking about here, and lots of excitement, and lots of things to think about in terms of what couldn't happen, and when and if these things occur at all. So for me personally, I'm sitting here and I'm looking at the excitement of the Bitcoin price again, retesting that $30,000 to $32,000 mark. I do anticipate we'll probably retest the lower regions again, but if there's a fail of some of these movements, like the 20,000 for example, there is not much data to support between that 20 and 15 mark. And there's certainly, if we get to that 15 again, there isn't a lot of data before that, which is why I've always sat there and looked at the 12 to 13,000 K mark. And again, it could be utter nonsense. It could be something that may not ever happen. I do have capital limit orders available around those areas if they do come. I'm really interested to know what you guys think out there. And as I said, I think it might be a ludicrous idea, but I'm just going based on the data that this could be a possibility that we have one more swing down at some point over these coming months, with the lead up with both the ETFs and the halving momentum. And if you think about a trader's philosophy, or from an institutional level where they know these things are coming, and if they got leverage bets on this, if they got leveraging going on, shorts and longs on these, it can really define that. They can almost essentially predict an opportunity, or they can force an opportunity to occur for themselves and others. And, with the likes of, financial insurance and risk management that these guys might have at that level, they probably don't need to worry about it. They just dictate the market. So it's going to be very interesting indeed, which is why I'm always cautious about everything in the crypto markets and stocks in general as well, of course. I think there's two elements to play to this. There's, like the micro events, and there's the macro events worldwide. And then there's things that happen in between, whether you want to call it manipulation or the dictatorship opportunity to, do what they can. They can rewrite this whole chart as and when they want. And that's why I think there's an opportunity to sit there and think and ponder about these next few months ahead. But in the grand scheme of things, I still stand by what I say. I think there's a good 3 to 6 months now at this stage, a few months down the line from when I first said it, to really start looking at, okay, we're hitting bottom areas. Yes, it could come down slightly lower still to retest, etc. Some assets are even going down to low points they've never been to before. And they could just drop off the face of the earth. Who knows? But the point being is that these next few months ahead are very fascinating. Whether you're a Bitcoin holder or not, you still have to look at the BTC chart because it does dictate a lot of the areas elsewhere. And in fact, if you remember, particularly in the last bull cycle, I remember this vividly, that there was always an interesting cycle of Bitcoin doing its thing, making money, passing it down to Ethereum, and then people making money on that, and then they go to the large caps, and then they go to the alt season. And you remember that cycle very well. I truly anticipate this to happen again. When it happens is another question, but you could argue that it's going to be between that April 2024 mark and the few months leading on after that, that you start to see this pattern over the 12 to 14 month cycle in the bull cycle event. This is where it gets interesting for me. As I said before, 2025 is an interesting year for the world finance application. It's going to be very interesting timing of all of this. And it could just be that amount of money that comes into fruition, including things like trade finance, which is accelerating, the AI opportunities, the IoT opportunities, the utility and the introduction of blockchain in general, both at a parliamentary, governmental and public level, CBDCs, digital wallets that we will have to probably use, all coming around that time. So that's what I'm thinking. That's why I'm thinking ahead. That's why I'm interested in Bitcoin when it comes down to lower prices than it is now, that there's huge gain opportunities. But it could go completely the other way in the sense that this may just eradicate everything we've ever seen before and just fly up as it wants to. And that ETF announcement could come out any time, and then I think it could go absolutely crazy, even if it's a short-term period and not coinciding with the rest of the market movements. But I think it takes that uprise of Bitcoin for people to fluctuate that cost back into Ethereum in the alt seasons, which I do tend to see in the cycle of a bull cycle, which could happen towards that third stage of next year. Guys, I'm really interested to know what you think about all this. You guys might be more pro and expert around Bitcoin. You may hold this for a long time. I've had a dabble in it, as I said, back in 2020. It's not played much interest in my mind until I've seen certain targets. I've got another array of portfolio assets that don't have the valuation price point of Bitcoin, but they certainly seen the gains and the opportunity that Bitcoin can equal to. And I think that's the ultimate point that I'm making, is that actually it's about gains, not so much the value of something. If you've got whole Bitcoins, of course it makes a huge difference, but I'm ultimately interested in, is this going to make 30%? Is it going to make 50%, 100%, 1,000%? This is where I'm more interested in. I don't have an interest in the actual valuation of a token or anything like this to an extent. So let us know what you think, guys. I think it's a really big, interesting time ahead, and very coincidental around all of the timing areas around the rest of the world and the financial world. Thank you for listening to this one, guys. We'll see you in the next Bitcoin update video. Take care. Bye-bye.